Elon Musk had a remarkable year. After surpassing Jeff Bezos to become the richest man in the world last September, the Tesla executive put up a $44 billion bid to buy social media site Twitter. Between the purchase, the drama that's come with it, and the tumbling value of tech stocks, Musk has spent the better part of the year in the headlines. But he remains fabulously wealthy. His net worth fell to $185.4 billion on December 7th, after briefly becoming the first person to be worth more than $300 billion at one point. So let's take a look at the assets that contribute to his wealth and how they fared this past year with Forbes wealth reporter Matt Durow.
In September 2021, Elon Musk surpassed the $200 billion mark for the first time and also passed Jeff Bezos for the first time as the world's richest person, largely thanks to his stake in Tesla. In the year leading up to that date, the stock nearly doubled. Within the next few months, Elon's net worth skyrocketed again, along with Tesla's stock, propelling Elon on a couple of occasions above the $300 billion mark, making him the first ever person to hit that milestone.
But the market this year has been much different than the previous year.
It's been a horrible year for tech stocks, with the NASDAQ down 30% year to date as we sit here in early December. It's been even worse for Tesla, down around 50%, and most of that decline has occurred since Elon agreed to purchase Twitter in April, before then trying to back out. But there have also been some supply chain issues, particularly in China, that have weighed on the stock after a really blowout first quarter where Tesla reported record revenue and profits. So if it weren't for that, things may have been even worse.
Elon's wealth is closely tied to Tesla's stock price because of an interesting performance award package he inked with Tesla in 2018.
When he received this huge CEO Performance Award, which is basically a package of performance-based stock options divided up into 12 tranches or parts, which he would unlock essentially as Tesla hit various milestones. The first quarter of this year, for example, Tesla achieved record revenue and profits, and that was enough to unlock 3 of those tranches, which were worth around $23 billion at the time, and left Elon with only 1 tranche left of that package left to unlock.
The value of Musk's Tesla stock has been hit hard by his purchase of Twitter.
Back in April, as we've now learned, tech stocks were at their peak. Elon offered $44 billion to buy Twitter, and pretty quickly thereafter tried to back out. In large part, many suspected due to the fact that tech stocks were in fact plunging, but nearly half a year later, he was in fact forced to follow through with his purchase at that $44 billion purchase price, which seemed steep to begin with, and particularly steep with what had happened since then with the tech stocks. He financed the purchase largely with $13 billion of debt that he was able to stick on Twitter's balance sheet rather than his own personal balance sheet, which is a big part of the reason that his personal net worth hasn't really been all that negatively affected by the purchase, despite our estimates of Twitter's valuation having declined in the time since the $44 billion purchase was agreed upon. In addition to that $13 billion of debt, he got $8 billion of equity commitments from some big investors like Jack Dorsey, the co-founder and former CEO of Twitter, as well as Larry Ellison of Oracle. And then most of the rest he financed with his own cash, exhausting our estimates of his after-tax proceeds from Tesla share sales leading up to that point. The market's reaction to the acquisition was very favorable. Elon offered a big premium on what Twitter stock was trading at the time, and those, the investors who chose to not roll forward their stakes into the acquisition ended up, getting a lot more than they probably would have if they'd remained with Twitter as a public company, given the tech stock's decline. The reaction of Twitter users has been a lot different. It seems like there's sort of a new mini scandal every day related to the changes that have, been implemented since Musk took over, starting with, the $8 a month to verify your account and so on after that.
Elon also runs SpaceX, a rocket company that did well this past year.
A real bright spot for Elon this year has been SpaceX, which has maintained and actually upped its valuation while so many other tech companies have experienced huge markdowns as of late. It raised a fresh round of funding in August at an $127 billion valuation, which is quadruple what it was just 3 years ago. We estimate that Elon owns about 42% of that company, so it does represent a significant portion of his net worth. I think a big reason that investors have maintained their enthusiasm about SpaceX relative to all these other tech companies, seeing big markdowns as the company just continues to produce. In August, as it was raising that fresh round of funding, it landed a big $1 billion plus deal with NASA to send 5 more rockets to the International Space Station. It's anyone's guess, what the next year holds for Elon and Tesla, Twitter, and how that all impacts his net worth. It'll be interesting to see if he's, ultimately able to right the ship at Twitter, given all the blowback he's faced since taking over the company, whether the evaluation of that now private company, which we estimate is worth, a little more than half the $44 billion he paid at this point, whether that will rebound, as well as will he be able to reassure Tesla investors that this is not as much of a distraction as they, may have worried. Which, might prompt Tesla to see a rebound of its own, a little bit more outside of his control. The supply chain issues, what will happen with those? I think the Tesla stake will obviously probably have the biggest impact on his net worth, and the Twitter stake, will certainly contribute as well.